this afternoon?
Well, over the last 2 weeks, I mean, it's been a pretty wild roller coaster ride here for expectations. They were expecting, a 50 basis point rate hike. That was about 2 weeks ago. Then it dropped all the way down to zero on the concerns. We even saw expectations for a 25 basis point rate cut. And then now we've come back up to zero, and we are expecting, we at Blue Line Futures expect 25 basis point as the rate hike. So it's going to be interesting to see how the market digests it afterwards. If the market does come in with those expectations, do we get this relief rally that we're going to see easier financial conditions going forward, or do we sell off where the market is extremely concerned going forward? Hey, the Fed's not being aggressive enough. We saw UK CPI data come out overnight, much hotter than expected. Are we going to see a similar situation in the U.S. where this inflation data continues to remain high while the banking sector and everywhere else financial conditions are stressed?
Phil, an interesting dynamic when you consider, this was the first time in a while, it seems like Treasuries rallying, rates coming off ultimately, as you pointed out, some of the banking concerns, but also this was a bit of a safe haven type tendency we saw. We'll talk a little bit about the impact we saw in terms of gold later on in the show, but the last week or so, a little bit of a different relationship in terms of what we've seen as far as Treasuries and the indices for that matter.
Yeah, if you look at the gold market, I think we're really in a corrective phase. And Sunday night, we blasted through that $2,000 mark. I think there was a lot of people that were waiting to take some profits up there. We've come down to a critical level of support, 1930. If we do break that $1,900 level after the Fed announcement, you're going to see it go into liquidation mode. It's got to hold the 200-day moving average, but that's way down there in the low 1800s. We are optimistic on gold. We did trim a lot of those positions over the last 48 hours. We would be adding on positions, but going farther into the calendar year, looking at December, where the Fed, we believe, will ultimately start a cutting phase.
Phil, talk to us a little bit about rates. I pointed out before we brought you in the 2-year yields have risen, call it 3.6 roughly. The lows that we saw Monday, 4.2 yesterday. Back to 4.35, has us to the middle of the range that we established off the highs in the beginning of the month.
The interesting thing about rates is that if you look at deposits on a week over week, these are total aggregate banking deposits. It's been one of the first times that they've started to come down. Where's that money going? Probably into treasuries. As people buy those treasuries up, yields are naturally going to move lower. And you could see that, based on the NASDAQ and everything else, they are expecting lower yields going forward. The NASDAQ is one of the best performing commodities out there, aside from orange juice. NASDAQ's up about 16% year to date.
Talk to us a little bit about what this means for the U.S. dollar ultimately. It's, been kind of teetering around and just below this 104 handle right now today, still comfortably below it at 102.70.
It's a reflection of all those safe haven trades. You look at treasuries, look at the dollar, look at the gold market. They've all started to come off. There's an inverse relationship with the euro currency, which looks set to break out. The British pound's going to be one of your stronger ones. What's really disappointing is the Australian dollar not really going anywhere. We've already seen the Swiss franc start to come off as well. So all the safe havens and the reflections and things that tend to mirror the dollar are all coming off together into this Fed decision.
Phil, we mentioned the Bank of England at the top of the show. We also will hear from Swiss National Bank, Norway's central bank, all expected to raise rates here today. I think it's important to not get tunnel vision and remember that this is a very global, concerted effort, to say the least.
Yeah, the problem is that these guys need to get ahead of the inflation. And the way it is you over tighten and you stay over tightening, for a longer duration of period. You're going to see the Bank of England. You're going to see the ECB. They're going to continue to do that. They're going to continue to surprise to the upside. As long as they're not affected by any of these, banking problems, which I think the worst is behind us. You're seeing bottoming action in like the Russell, the S&P 500, which have large banking sectors. If we can get that behind us, I think we'll see a relief rally on many of those, and the Fed and other central banks are going to stay the course on this rate hiking cycle.
6B, the British pound inching its way back up to 124, reflection of some of the efforts we've seen in terms of central bankers in England. Also, the ECB helped rally the euro currency, again, back up through that parity level, back to 110 recently. And then ultimately, here you can see the inverse correlation as far as the dollar index. And in addition to, Phil, anything in terms of the Japanese yen stand out over the crisis that we've seen? Oftentimes you look to that currency as one of those safe haven type tendencies or recipients benefits of?
110%. That's like one of your go-to markets. So you kind of, when you start to feel like one of these, these crises, whatever it is starting to formulate, you got a checklist of different things. You start seeing the gold market react. You see equities go lower. You see the dollar index catch a bid, treasuries. You got to start looking at those other opportunities. The yen is one of those that are out there, as well as the Swiss franc, and you start getting short some of those risk assets. So I believe that the yen has an underlying floor on it at the moment, and it is turning around nicely. I mean, look at the yen over the course of last year. It was just a disaster of a market, and now it's finally showing some signs of life, and it's showing what it truly is, and it is that safe haven play.
As we move away from the Fed here into the end of the March here, let's not get tunnel vision. Phil, where should some of the focus be? Is it U.S.-China relations ultimately, some of the geopolitics we've seen? Where are some of the risks and concerns out there, again, beyond the FOMC's decision today?
Yeah, it's got to be China on the reopening. It's got to be those U.S.-China relations. China has been buying a lot of agricultural products from Brazil. They're already, we saw Xi Jinping, with Vladimir Putin having a meeting. I mean, it seems like, the markets in some of these countries are getting away from, relying on the U.S. for a lot of these feeds and a lot of these commodities and stuff. So we've got to bring everything back together. That's how you get, the globalization, you get the inflation down, and that's how it's going to work out.
Phil, lastly, before we let you get out of here, I'd imagine you've been keeping an eye on Bitcoin and what we've seen, the run-up. I've got it hanging out right now, 28,390 overnight, 28,450. Does it surprise you to see it bounce back to the extent that it has?
So it is a reflection of the NASDAQ. It is a reflection of that safe haven. I did mention that deposits have come down. I believe that there's been a surge in Bitcoin. I talked to a lot of other, brokers that work at some of the securities institutions are saying that a lot of people are, questioning, hey, can we invest in Bitcoin? So it is catching some steam right here, and it's finally proving that it is, something that's off the grid, not a reflection of a banking deposit, and it has its own, cold storage, isolation, and safety that people are looking for in maintaining some sort of value.
I keep wondering, and we're going to talk a little bit more about it later in the show, the bid we've seen in Bitcoin stocks coming back, is this a reflection of what we've seen in terms of Fed officials shoring up confidence and some of the shorts covering, or is this initiative new longs starting to come into the market? Because there's a big difference in terms of where we go from here. Phil, appreciate you joining us to help us take a closer look at currencies and treasuries this morning ahead of the Fed. Phil's the chief market strategist of Blue Line Futures. You can check him out there.